So you are all very welcome to this webinar, which is entitled The Impact of COVID-19 on the Audits of SMEs. So myself and Jeremy Toomey from Practice Consulting are going to be helping you through this today. It's a volatile situation, a fluid situation, changing all the time. So we're going to do our best to bring you the latest and give you our thoughts on this. When I say you're all welcome, I'm not sure if you as an attendee can see, but we have more than 200 people registered to attend this webinar. So certainly audit in the time of COVID is definitely popular, and it's something that people need to give thought to. I appreciate that for the past week people have been concentrating on survival. But business goes on, audits start and business goes on. And one thing which is particularly timely and relevant right now, which is on a lot of people's minds, is the question of how do you approach stock takes right now? What do you do? So we're certainly going to be addressing that. We're very conscious that there might even be stock takes for 31 March coming up this weekend. And there will well be some, especially in Northern Ireland. Welcome to anybody from both Northern Ireland and the Republic to this. We will be addressing you both. So it is an even more popular date in Northern Ireland than in the Republic. It's 31 March. So there's a lot of stock takes happening around about now. What do you do? We're definitely going to be thinking about that. I would encourage people to keep the questions coming in. It certainly keeps it real, keeps it live for us. It's a new experience-ish for us to be, or an unusual experience anyway, for us to be talking to the camera. And it's certainly great to see your input to keep us on track, and for us to take the temperature of what people are thinking and what's on people's minds. And by all means, this is the first of a series of presentations. So we would, we'd be looking to you to inform us as to what you want. I certainly have some things which I think we should put out there, but we'll certainly also be responding to you. Okay, so into the body of the presentation, we have a fair bit to get through today. We have certainly sent slides out, so the slides will be available. I have a feeling they're not just available yet, because I asked some of the early attendees whether they'd got an email of slides. They will be emailed out to you and they will be put up on our website, so you can get the slides afterwards. Anyways, this is us. Many of you will be familiar with us in Practice Consulting. For those of you who are not, in Practice Consulting, our role is to help members in practice, and the vast majority of the practitioners that we help are members in smaller practices, because they're the people who actually need our help most. We spend time working with them when we can actually physically get out. We spend time working with practices, so therefore a lot of our experience comes from dealing with smaller practices. We wouldn't consider ourselves necessarily to be technical experts. What we are is we are a support service for practices, and we spend a lot of time talking about technical issues to practitioners in their own premises. And it's generally speaking about SME issues. So that's what today is all about. It's all about SME issues. That's myself and Jeremy Toomey. We do much the same thing. Get out to practices, be on the phone for practices, be there for your small and medium-sized practices. Oh, and by the way, obviously this is a free webinar open to all comers. If you are not an auditor but are interested in audit issues, you are more than welcome. And we'll bear in mind that there's both sides of the fence are here from the audit point of view, and we'll pitch our presentation accordingly. So that's it. There's our disclaimer. Look, this has been put together in a hurry, as you might expect, and it's our best take right now on a fluid situation. So bear that in mind. And also, like any presentation, it's not all about the slides. The slides are a presenter's tool. We'll be saying right the way through it, go back to the source material. Go back to the source material. Go back to the legislation, the auditing standards, the accounting standards. That's what this is all about. These are our topics. We're being ambitious, I think, in what we can cover in the hour. I can see we're 5 minutes into the hour already. We're running out of time already. Impact. So look, some of you will have attended the accounting webinar earlier on this week. and you'll know that, you know, for any accounting topic, it's got its equivalent audit aspects. So, you know, some of the slides, we will recycle the actual slides from webinar to webinar. That's grand. So we're going to just look very more quickly at the accounting issue and then launch into the audit side of things. So that's what we're going to do. These are the topics, practical points. As you see, we're trying to keep it real. The audit plan, the audit risks, components, especially stocks and stock takes, debtors, income expenditure, impairments of tangible assets, property, plant and equipment, going concern, post-balance sheet events, reporting, limitation of scope and uncertainties in the audit reporting world, and completion. So as you can see, far more than we can possibly hope to cover in any sort of detail. But listen, we're going to hit them very, very quickly and just get you thinking of what you should be thinking about and what you should be reading and what you should be doing. Okay, just one more query there. What advice would you give to firms on the question of facilitating access to audit files for successor auditors with current restrictions in place? Wow, that's one. Hadn't thought of that one, have to say. Like I say, look, to be honest, you know, so far as possible, it's business as usual when it comes to questions like that. There is a right for incoming auditors to access files. Can you do it electronically? I suppose would be the question. Can that be done reasonably and electronically? I would, to be quite honest, I would have thought that now is not a terribly good time to change auditors. You'll have to give us more time to think about that one. I had not thought of that. I suppose, and the reason why I'm stalling there is because, generally speaking, what I would be saying to people is, you know, you can give physical access to people, but you wouldn't be as inclined to allow them to copy your files and such like. Whereas obviously, if you give people electronic access to your files, you don't have that comfort that they're not going to copy the whole thing. Okay, so yeah, look, that's definitely a consideration. That I think is one for the next day, if you don't mind. That's one for the next day when we're dealing with audit issues more deeply. So I'll just put that in as a follow-up item. Successor auditors. Okay, yeah, really good question though. Right. Okay, so those are our topics. So we'll just crack on through these. As I say, I'm going to take the first few. I'm going to hand over to Jeremy, and then Jeremy is going to take the second half. That's really what we're going to do. Look, this is pretty much the same slide that we put up for the accounting issues. There's a lot of uncertainty. There's a big impact here. You know, if you could divide your clients, I was talking to somebody yesterday, into thriving, surviving, and diving. There are a few clients you will find who are doing well. You know, who are actually thriving in this environment. So that's, you know, it's good for them. They may have supply chain issues. I mean, they may have a lot of demand for their product, but with the current and coming restrictions, they may not be able to meet that demand. So, albeit that they can see that they could do business, they mightn't be able to do that. So that could be something to think about. Interruptions, non-availability of personnel. I mean, the best thinking out there is that we still haven't hit the peak of this thing. It is going to get worse before it gets better. Still, thank God, if you're looking at the Irish situation, it's not as bad as it could be, either north or south. It's not as bad as it could be. It's not the dire. It's not quite up to the predictions yet. Thank goodness. But we don't know what's going to happen next week. We still don't know. So look, other things: reduction in earnings, sales, productivity. Of course, absolutely. If you've got anything to do with the leisure industry, anything to do with the sports industry, whatever else, you know, you're going to have been hit very, very hard. People are conserving cash. You know, people are not as quick to pay at the moment. Even if they can pay, they're saying, okay, I could pay you, but will I pay you? You know, is a consideration. So that's caused disruption. Just the slower cash coming in has caused, and the knock-on effect of that. Planned expenditure, business expansions. You know, certainly that was, you know, just even going by today's Irish Times, they're talking about capital projects being delayed. Okay. Inability to raise finance. Well, I mean, yes, inability to raise finance. Once again, that is something which hasn't hit my desk just yet. This is going to be something which may happen next. Inability to raise finance. Now, I know there's a lot of government supports out there, and I just saw a bit of traffic there in our internal emails that, you know, maybe a good webinar would be government supports in the current environment, which probably would be. Increased volatility in fair value of assets. Well, absolutely. You know, I mean, that is going to be a thing. if you're looking at, if you have an asset that's valued at fair value, they are volatile at the moment. You've seen the stock market just flying up and down like a yo-yo in the past while. So, I mean, what time is it? Was the question that you'd ask if you want to know the value of quoted equities at the moment. Reduction of discretionary spending, elimination of tourism. Okay, so all of that. We've seen that, the downstream effects of business contraction and closure. So what happens next? Okay, I suppose just because you're in an industry that hasn't been directly affected, your customers could have been directly affected by this. And also you've got the unexpected, the good old expression by Donald Rumsfeld, the unknown unknowns, the things we don't even know that we don't even know could impact on this. And what's the next turn in the road? Is it going to be better or worse? Are things going to, unexpectedly, they seem to have turned some sort of a corner in China, which is great, good for them. And can we be expecting something similar where we can see things opening again, possibly sooner than we fear? But we don't know. We simply don't know. As auditors, you have to be skeptical. You have to be prepared for the worst. Okay, so that's the impact on business. Our objectives today, brief summary on the impact of audits of SMEs. It's going to be brief. To be followed by coming with more detailed webinars. I mean, I think any one of these topics, myself and Jeremy were discussing earlier. Look, it's this. Everything we're discussing here, you could say more and more about. There's just a lot of stuff, going on. You can see me keeping on my screen. I've got 4 screens in front of me, guys. 4 screens. I feel like I'm trading stocks because you having any other screens open interferes with the presentation. So I've got an iPad and my home computer open as well in case we need to research anything during this. This is the joys of home working. Anyways, okay, so to be followed in the coming weeks by more detailed webinars. Yes, absolutely. So we're acknowledging this evolving situation. We're trying to engage with you. You need us now. This is when we want to respond to what people need. In the end of the day, everything we do in practice consulting is for the benefit of the members. So what people want now is just information, advice, guidance, support, empathy, and we're trying to deliver all of those things as best we can through any reasonable channel as we can. Okay, so by all means pick up the phone and talk to us as well. Don't forget that. Okay, but to answer your questions, we've got a few questions yet. Please do ask. Keep the questions coming. Please do. We will deal with them, and we certainly want to address members who have to attend stock takes next week. Okay, 31 March is fast approaching, and you can hear some noise coming in the background there. The other joys of home working. At least they're not fighting and cursing. That's
hopefully no visitors going on.
We'll see. I'll introduce you to whoever comes in.
We might need a hand later on, Conal, so get them on board.
We might. We'll get the view of the child on the street. Okay, now here we go. So that's our objectives today. Practical issues. Look, first things first. Is your office open at the moment? It's certainly a question that people have been asking. Now, I had a word with Aidan Lamb before we came on. Aidan, the head of professional development, and I said, look, what's the legal position here? Are we going to? Is there any sort of legal aspect to whether your office should be open or not? And there is none. I mean, in neither north or south is there any definitive requirement for your office to be either definitively open or definitively shut. It's up to you to determine to what extent you need to be there or not. And indeed, certain aspects of what we do are essential at the moment. To be there for clients, to be there for clients, especially clients who are themselves essential industries. So we are not going to instruct you as yet to either open or close your office. We're not going to criticize you for either opening or closing your office. So just to bear that in mind, that's the institute view, the professional standards view of this. So I mean, and then what are the practicalities? Most smaller offices are open to an extent, as far as I can see, and closed to an extent. They've sent staff home who can work from home. They have sent staff in who need to be in. The servers need to keep turning in offices, for example, and that needs to happen. Okay, so that's that. Is your office open? First thing you need to obtain. No, the rules haven't changed. In every audit, you still need, in spite of everything, to obtain sufficient appropriate audit evidence to support your audit opinion. That hasn't changed. So, as with the last recession, the rule book was not thrown out the window. It's still the same. You still need, if you find a positive opinion, you still need to have a sufficient appropriate audit evidence. You need access to client sites. You may need access to client sites, or you may not. Once again, we're not telling you you either must or must not attend client sites. That's a decision for yourself based on practicalities, based on whether your client is open, based on whether it's safe to attend client sites. So you need to consider whether your client's business is either open or not open. That's obviously going to drive a lot of the questions, out of the practicalities, or whether you can access your client's accounting records via the system, via your system, via their system. If your client has records in the cloud and you've been dealing with your client in the cloud up until now, it obviously facilitates things a fair bit. Or even if your client is themselves online, even if you hadn't previously been accessing their system through the cloud, if it can be done, this might indeed be the time to do it. Whether or not you can download client data is a practical issue. It may be the case that where before you didn't, can you, should you? You do need to consider GDPR issues around this. In general, I would say I wouldn't regard GDPR as a blanket restriction on accessing client data or downloading client data necessarily. You know, if you've got a legitimate interest in doing that, if that's the only practical way of getting the job done and facilitating your client, I wouldn't think that GDPR specifically prohibits you from doing that. So that would be an initial thought on where we are with GDPR on this. Okay, so you may be at various different stages of the audit. You may be, the year end is imminent and you need to attend the stock take. Okay, so we'll cover that. You're planning the audit. You may be planning, well, what do you mean? That may be the only thing you can do is plan at the moment. So what should you be planning? You may have audits that have substantially completed, but the financial statements have not been approved. Okay, so and going back to the planning one, well, obviously the next thing you need to do after planning is get on site or not, or work from home or whatever. And then you may be in a position where, sorry, the third bullet point there, where the audit is substantially completed and you're wondering what sort of audit report I'm going to give these people. Or else you may have an audit report that's recently been signed in the past short while. So what do you do if you've just recently signed the auditor's report? Should you be thinking, do you have any responsibility there, given that things have changed fundamentally since that? So first of all, just looking at your audit plan, just going back to all the usuals. Like I said, once again, this may look very, very familiar to you because you do not throw the rule book out the window. You consider the entity in its environment, albeit that's changed. You consider the economic situation in the current volatile the current volatile environment. You consider the legislative changes. I mean, obviously, you know, any of the government supports or restrictions have the force of legislation behind them. So you're considering how's the legislative environment changed for people in this time. Now, naturally, this situation has created risk. And for every risk, you need a response to that risk. You need a response to that risk. And dare I say, a risk of fraud. I mean, there will be those who will see this as an ideal opportunity to perpetrate a fraud. So you do need to consider that. You know, just as I was just reflecting, speaking to somebody there recently, that you know, the situations like this bring out the best and the good people and the worst and the bad people. And you need to be thinking about that. Practical challenges. Can you get on site? Okay. I mean, once again, I've been talking to people in bigger firms. I understand that a lot of bigger firms are as busy as they ever were in the audit component of the firms because they are auditing from home. So I mean, there's a lot of work that can be done from home, off-site. Practical supervision of audit staff. An expression that I heard recently there was the inability to exercise management by walking around. MBWA, there's an acronym for you. MBWA, management by walking around. You can't do it when staff are off-site. You can't get that general view of what people are up to, whether they're struggling, whether they're not, how they're getting through their work. you need to make contact, you need a more structured approach to managing staff. And that's less important for more senior staff, more important for more junior staff, arguably. So that presents its own challenges. Staff day attendance, as I say, attendance assessment of going concern, Jeremy's going to cover that. Post-balance sheet events, Jeremy's also going to cover that later on. So those are the issues, impact, audit risks. So once again, just looking at the risks, obviously the risks that the financial statements are a component of the financial statements are materially misstated. So uncertainties. So if you cannot place a value on an asset, that's an uncertainty. That's a challenge. Or else, you know, I mean, you may be able to place a value such as what value, what lower value is there. Risk arising difficulty in assessing and collecting audit evidence. I mean, if you cannot get the evidence, that's a risk that I won't be able to audit it. Okay. So therefore, you've got the inherent risks and the audit risks, which are being driven by this process. Risk that the audit won't be delivered as effectively, but see this lack of ability to simply manage in the informal, fluid way that you can. You know, this needs to be more structured. It is in itself a risk, fraud risk, as I said, going concern, and indeed risk the practice. I mean, if you believe you're not going to be paid for an audit because your client has some degree of financial difficulties, that in itself, and indeed if you consider that it's going to be more expensive to carry out the audit because you're working more slowly, and the fact that you're not going to get paid for that, these things create practice risks. So you do need to consider that. Okay, so the specific uncertainties in the financial statements, I know that Jeremy's going to cover these in a degree of detail later on, specifically in the context of reporting. So the impairment of assets like stocks and debtors, okay, that they could be impaired as a result of this. Also, as I say, always considering the post-balance sheet event aspect of this. It is an event as opposed to some characteristic of your stock or debtors, as say 31/12, 2019. Impairment of property, plant and equipment, looking at recoverable amounts, need to consider that whether an impairment has happened. Fair values of investment properties, once again. I mean, I don't think that, you know, issues around property, various issues around property are going to impact quickly. This all depends on what sort of recession we're looking at. I was looking at today's Irish Times, Joe McAvoy was talking about, you know, a V-shaped recession. In other words, we go deeply into this thing and steeply out of it again. I hope he's right. I hope he's right. And if that is so, it could be that the lag in property, you know, we'll just wait and see what happens. But I expect property is a lag thing. If I were going to sell a property tomorrow and somebody told me that in the short term my property had fallen in value, I'd say I'm not selling. I'm not going to sell that property. I'll wait. If I thought that they were going to rise again within a reasonably short period of time. So, you know, you don't see quickly, especially if the situation is considered to be temporary, you don't see falls in property values. So that you need to keep an eye on that as an auditor as to what's happening, what way things are going. Contingent liabilities, resolution. So I mean, what contingent liabilities have come out of this? Have come out of all this? Obviously, it's going to throw up difficulties for disclosure and reporting. Uncertainties around the going concern assessment, assertion indeed. Distinguishing uncertainty. So one thing I would ask people to do, okay, is to consider the difference between an uncertainty where information is not available about something, simply not there, and a limitation of scope where the information is there, but you as auditor can't get your hands on it, okay, either because of circumstances or because of it's imposed by management in some way. So, for example, looking at stock, okay, it is uncertain what the net realizable value of stock is. You don't know. Nobody knows what certain amount of stock is going to be sold for if that hasn't been determined yet. So that's an uncertainty. On the other hand, if you can't get out and count the stock that's actually there, then that's a limitation of scope. So there you can see the difference there between the two aspects. And I know Jeremy's going to be speaking about that later on. Okay. Stocks and stock day attendance. Okay, right. So this is what a lot of people I expect logged on to hear is, what do you do about stock takes? What's happening now? Because it's coming at us quickly. 31 March is coming at us next week. Okay. So let's look at two scenarios, right? Either the entity does not carry out a stock take at year end. They don't do it. Okay. One, or else the entity carries out a stock take, and you're wondering, well, what do I do? Do I turn up or not? Okay, so or indeed, how do I turn up, or what do I do? Should I change my procedures when I do turn up, and so forth and so forth. All right, so that's that is what I'm going to look at now. Okay, right. If the entity closes down, okay, and doesn't hold a stock take, all right, then that may not present you with a fundamental problem, because stocks are frozen, stocks are not moving. So if either your client is going to close down completely, sadly, okay, but assuming that's not going to happen, your client's going to open again and has plans to open again at some point, we don't know when yet, but you should at this point be engaging with your client and saying, when you open again, you know, even ordinary business logic would demand that they have a stock take to see, well, what stock have we got? Is it saleable? Is it damaged in the period? Has it been stolen in the period? What do we have? To do a stock take before they start, and for you as auditor to turn up and count the stock. Okay, so that's what you'd expect, and that's something that you could build in now. But the key thing is communication now, to do that, to make sure that everyone understands what the next step is going to be, so that you are not faced with the possibility that they open up, start selling, stock flies out the door, hopefully, and then a couple of weeks later they say, oh yeah, we opened up there, and then you're faced with the problem of, well, how do you count stock? And obviously you don't, and you, in that situation, would have a limitation of scope potentially if stock was material and there was no other way that you could determine what the value was. Okay, so in this case, I'm saying maybe relatively straightforward to carry out a rollback, you know, to the date, to the accounting year end. Indeed, some people may choose to change their accounting period date, which, if they do that, that can be done. You can do it once in the 5 years, can't you? And people may choose now is the time to do it. Fair enough. And then you don't have to attend the stock take until the new accounting year end date. Some people may choose to do that. You can do that north and south these days. So that may be a feature of this. So, and that's certainly something that we could cover in more detail at a later date if we get queries about it, if that becomes a thing that people are doing. Okay, so we're saying, look, when you get back, condition of stock, existence of stock, what happened during the period. You may find there were deliveries during the period. Okay, and once again, it should be relatively easy to determine what came in and when. Okay, another alternative is the client doesn't hold a stock take but continues to trade. So they say, look, we're keeping trading, but we just don't have the resources, don't have the people to do a stock take. We have to stay open and trade. What then? I mean, and that's, you know, as an auditor, you don't throw the rule book out the window. They, you know, a stock take wasn't done, it needed to be done. You may have a limitation of scope there because, you know, they didn't count the stock that was there and you couldn't attend a stock take that didn't happen. Okay, I mean, what would you do if you knew that were happening? Could you turn up on the day and make an assessment? It doesn't sound very practical to me. I'd certainly be engaging with the client and saying, what can be done here? What's practical to do? I don't like this plan. Okay. Okay, so the other scenario, I'll stay on this for a little bit because I appreciate that this is urgent and people want guidance on this. Listen, by the way, on this, 2 things. Okay, we are putting out a communication tomorrow in tomorrow's e-news on this very topic. We're putting this out. Okay, we're going to cover these scenarios, these exact scenarios. We're going to put this out as a communication in tomorrow's e-news. So look out for that. The other thing we're going to give you a link to, and you can do it now if you like, is to go on to the ICAS. That's the Institute of Chartered Accountants of Scotland. They have put out a really good guidance note on stock take attendance, which we've read. And they've focused in on a lot on what I'm going to talk about now a little bit, is this idea of virtual attendance of stock taking, which is great, happy days. So read that. I mean, I don't see anything wrong with that document. So certainly we'll give a link to it tomorrow also. Our guidance tomorrow is going to be specifically for SMEs. Okay, so it's going to be a practice consulting document, which is informed in part by this webinar. Okay, so right, client is going to hold a stock take. So is it safe to attend? Okay, you know, can you attend and maintain social distancing and all this sort of stuff? And look, what I'd say to anybody is your own health and safety is paramount, and health and safety of your staff is paramount. I was speaking to somebody yesterday who was saying, well, look, audit staff member who in the ordinary course of events would have attended the stock considers herself to be vulnerable. That's fine, she does. So it was a partner I was talking about, he was going to go out and attend the stock himself. He was going to do that. And he felt it could be done safely. I think it was a stock taken in an outdoor environment, and he felt that could be done. I mean, maybe his thinking has changed since yesterday. I don't know. But that was where we finished the conversation. It was that he felt that he could do that. And like I say, we're not instructing you in the institute to do that or not. That's a professional decision based on the best medical advice that you can take, and so forth. So that's really where this is all about. It's all about health and safety, advice given out by the government around sort of your own likelihood or not of endangering your own health. So the best people take that very, very seriously. That said, if you can get out there and keep social distancing and keep away with your clipboard, and I don't know, I'm thinking a car lot or somebody's selling cars. Can you get out? You're in the open air. It's relatively easy to maintain social distancing, and you can achieve a lot. Fair enough. The other alternative, and this could require a fair degree of cooperation from your client, is to do some sort of a virtual attendance of a stock take, which assumes the client is going to hold an actual stock take, because they can't obviously count the stock virtually. So therefore, you either by phone or by laptop or by iPad or some means like that have a virtual presence there, like you're having at this meeting today, whereby they pick up the phone or laptop and allow you to look as close as you can at whatever stock count is going on. Even as far, if you read the ICAS document, they're going as far as saying, if you see a box from your laptop, looking out for your laptop, if you see a box that needs opened, say, go over and open that box, let's see what's in it, and questions like that. So, if that's practical, it's certainly worth it. I would imagine it would require a fair bit of planning with your client and a fair bit of buy-in from your client that they're willing to do this thing. I mean, the alternative is, we'll talk about the alternative now in a minute, so the alternative might not be that appetizing for the client. But you need to, these are the decisions that you have to do. The other thing, and once again, it's a fair comment, is that you gain a lot from talking to the people on the ground in the stock take. I mean, you talk to the store staff; they're very often people who will speak their mind about the condition of stock and everything else that springs to their mind. So you learn a lot by talking to people that you wouldn't always speak to, and you see a lot by turning up at the stock take. So that element of the sort of either actual or virtual attending of the stock take is there. I mean, once again, just pursuing the thing, you could attend the stock take, but not necessarily do all the things you might do at a normal stock take. You could just be more circumspect. You gain a lot from seeing what's going on, from seeing that it's done, that it looks right, it looks and feels right, it smells right, and all of those things. Okay. What I'm saying also is, don't forget, this is your chance. I mean, bearing in mind, you could well be doing the whole audit in the context of limited physical attendance at all at the client site. So this is your one chance, perhaps, to get out to the client site. So you're considering things like assets. So what assets do they purchase? What assets are there? Physical condition of tangible assets. Okay, cut-off details. Reflecting on this thing before the start. There's one thing I don't think you could do is count the petty cash. But I mean, I dare say you never really needed to count the petty cash that badly from an audit materiality point of view. But everything else, to some extent, can be done. Okay, so I'm not seeing any more questions coming in. By all means, do ask questions. Now, what else are we going to do? Okay, now, so, okay, now, looking at that, if you cannot apply sufficient alternative procedures, You must consider whether the scope of the audit has in fact been limited. Because this may be where you're getting to, that the scope of the audit has actually been limited, and that's it. So you might have to consider the impact of this in your auditor support. Now, Jeremy's going to cover that now soon. Inability to count stock and the impact on the evidence regarding the balance sheet. Don't forget it affects the balance sheet and the P&L, okay, and the results for the year, and indeed it affects next year's results, because you don't have a clear straight line to open the year either. You don't have your opening stock, so that could be material. Now, obviously, next year, 2021 year end, it's less, possibly, arguably, less critical to the whole thing, because at least you know your balance sheet. Hopefully, we're all still here. You'll know your balance sheet is right, because you can audit that. But the split between 2020 and 2021 might be the issue. Okay, not as critical as not having your balance sheet right this year, but nevertheless something to be thinking about. And indeed, might be just one of the things, just one of the many things that you're faced with. You know, as many people were back in the last recession, whereby you could have multiple uncertainties. So we'll deal with that in a few minutes. We don't want to eat too much into Jeremy's time. Transactions and balances, right? So the world has moved on a hell of a lot in recent years regarding, you know, the cloud, access to information electronically, and so forth. So, you know, you may find that it is far easier now than ever before to audit offsite. And as I said, speaking to people who are involved in the audits of larger corporates, certainly, you know, they're just continuing on. They're continuing, never busier. Everything being done offsite. It could have been done offsite all along. Benefits were getting staff out in a team together, and the benefits of physical proximity. You don't have that, almost everything else. So, you know, which tests require you to see physical documents and assets? Less than you think. Okay, if you can get somehow, either virtually or actually, to the stock take and see what needs to be seen, then what else do you need to see? You know, I mean, original copy documents, can you see scans of those and things like this? So when you get down to it, how many of those do you really need to see? So you probably need to be thinking about that now. So what can we do? Many clients, everything is scanned already anyway. That's what you would have been seeing anyway. Can you select a sample of documentation, even so far as to ask for a sample of documentation to be physically sent to you, if it comes to that, or scanned to you, or whatever else. Get a color scanner. It's obviously, you know, you're down to questions like, well, it's harder to doctor a document in a color scanner than black and white photocopy. Can you see physical? Can some physical testing be deferred until after the crisis? Yeah, so you can do everything else, bar one or two physical tests, and you're just ready to do those, sign off when the time comes. Hopefully, the lockdown period is such that that's actually practical. Can you change your audit approach? No, I mean, you know, in other lectures we've been talking about the power of data analytics. Okay, to look at, you know, to use data analytics to search for large and unusual transactions, or unusual transactions, because the large ones ought to stand out, but unusual transactions, unusual transaction patterns, unusual patterns. I mean, there is a difference between, as I was saying on previous lectures, there is a difference between the statistical appearance of numbers that are generated that are fraudulent versus numbers that are real. So it's all sorts of issues like that you can now start to think, well, now's the time to start using these tools to audit my clients, whereas before maybe you couldn't. Audit of debtors, just to pick audit of debtors as a component where, you know, it could be that it is simply more difficult to collect cash as a result of debtors. So your assessment of whether debtors are going to be collected or not, or when that happens, you know, if the inability of a debtor to pay is entirely as a result of COVID, and you're talking about a 31/12 year end, that might be a post-balance sheet event, maybe a post-balance sheet event. Okay. Other things, can you review subsequent cash receipts? You can probably do that electronically by looking at the records. Can you carry out a circularization, either by direct communication with the debtors, or the usual way? Can you do that and get outside evidence, third-party evidence? That way you can that could be possible, provided the debtor hadn't actually closed their doors and shut down. So you have that. Impairments of property, plant and equipment. This is more of a downstream effect, okay? So just one to be thinking about now, to be planning for and so forth, and reflecting on, I guess, because the lag factor that I talked about earlier in property values and general profitability of industry. So you may have a fall in profitability of businesses going forward, where that's combined with fall in asset values. You may have an impairment that you need to book. So just be looking out for that. That's the rules there. You can read the slide for yourself. Don't want to spend too much time talking this now. Time is beginning to run away from us here. Don't forget, the higher of the fair value, less cost to sell. That's the fair value, or the value in use, which is essentially a pro rata of the net present value of the future cash flows of the cash generating unit in which the entity sits. Okay, so and then when the recoverable amount is less than the carrying value, you've got an impairment which you must book. Okay, so that's the accounting rule. As an auditor, obviously you got to understand the auditor rules. Okay, you need to know it when you see it, and apply skepticism to everything that I've just said. Okay, anything that I've just said is subject to the rosy viewpoint and the realistic viewpoint. So you need to consider that and to make sure as an auditor that you're being realistic. So you need to get evidence around everything I've just mentioned requires evidence. Okay, that you need to consider, and you need to consider the lag in the lag in market value falls. You need to consider, if you're going to get a valuation, that all the usual considerations around valuations naturally. If projected financial statements are produced to support a value in use calculation, or the going concern assessment, you've got to be skeptical about what is being put in front of you. Okay, so I won't say any more about that now. I want to switch over to Jeremy. Now, Jeremy, this requires me to move forward.
Your job is still not finished. I'll be prompting you every so often to go forward. So, but you can give the voice box a bit of a rest, and you've definitely given a lot of food for thought there to all of us today. And I've a little bit more to tell you about. So the note taking is not finished for you guys. As Conal mentioned, we've recycled some of these slides if you've been along at our financial reporting session back on Tuesday afternoon. But again, it is very important to set out what is the requirement on the financial reporting side, and then to set out what you as auditor have to do. So on going concern, you may have seen this slide actually on Tuesday. Again, as Conal went through, we have, of course, a lot of uncertainty with this COVID-19 outbreak, be it stocks, be it around debtors and the collectability and so on. As Conal mentioned as well, we do, of course, have one or two industries that are doing very well. We can all think of food retail, we can think of pharma, but unfortunately they are the exception. And even just today, I know the ESRI has put out a report that they see, and hopefully Conal is right, a very sharp dip, but also a very quick return with a 7.1% reduction in our GDP this year, which is very frightening considering we were going for a 4% growth. Again, just looking ahead at what could be the issues, of course, you see, as we know, unfortunately, most businesses now, when I put together these slides, it was some, but we've our lockdown since both north and south, where most businesses now are forced to close, particularly in hospitality, in restaurants, whatever it may be. And again, we do have to worry then, of course, is if they don't have actually got an online presence, you have very little actual demand, you may have demand, but you have very little actual way of selling. And again, of course, collection of debts. There are, of course, a couple of areas I can think of that might see this as an opportunity, perhaps, to basically close up shop. They can see a future for themselves going forward in the next year or two. One sector I've heard of from talking to accountants is recruitment firms, where they say they've done well, they don't want to, they have their cash pile and they don't want to waste it, as I say at the moment, and they can see the recruitment market very strong this year, where they'll simply close up shop and move on. Again, hopefully we won't see too much of that, where there's people going into members' voluntary liquidations, but it's something to be aware of as well. Conal, on to the next slide.
And now, it's trying to get ahead of you there, but yeah, there we go.
Very, very good. So, important, as I said to you, to concentrate and look at the financial reporting rules here, and what exactly do you have to do? As all of us should know here today as auditors, the key thing here is management, and it's not you as the auditor to assist them or to make this choice for them. Management have to make the ultimate decision on whether the entity is a going concern. and they have to nominate to prepare the financial statements on a going concern basis, but they must look 12 months out ahead from the reporting date. So it's not the year end, it's the reporting date. So makes our life even more difficult at this time, and something to really, really consider. So what's the question we have to ask here? Question is management have to ask is, is there a significant doubt of the company's ability to continue as a going concern as a result of COVID-19? Again, this is something that they will have to, of course, as I say, undertake some work in. So particularly around cash flow projections, maybe scenario analysis. And again, I'll get onto this in later slides. You're going to have to assess that and come to your own conclusion. Again, key thing here, moving ahead, thanks Conal for that, is we have to look at it to say to you, it's appropriate to say, and again, you do have to take into account the events that have happened post year end, which is what's going to be the most of the impact here. So again, just looking at that here, we have the events, as I say, with COVID-19, and it's going to have a significant impact on the actual entity. It may be necessary management to consider the appropriate severity on concern basis. No big shock there. And again, you may of course have a company that is going to be now, you can't see a future for it. It is at the moment, and it may already have underlying issues coming into this whole actual COVID-19 outbreak, but now definitely it's insolvent. You are going to have to get into a liquidation situation here. Obviously, going concern basis is not going to be appropriate. And again, the accounts probably will be a second priority on this, but again, just to be conscious of as well. So Conal, click ahead in the next slide. So here are some, I suppose, matters that management in putting together their going concern assessment that you will then assess as the auditor must consider. Nothing too mind-blowing here. Firstly, as I mentioned, you may have an entity, and so many businesses now unfortunately are, where they've had to cease operations. And the key thing here, and I'm sure a lot of you as accountants out there, you've had very worried business people coming forward and you're assisting them in actually helping them to do cash flow projections, maybe scenario analysis, best case, worst case, most likely for the next 12 months, but they need to have that in place themselves to make their assessment and going concern. Again, you have to look at things like the customer base. Is the actual, are you likely to lose one or two key customers in this? Have you got a total lockdown and that you can sell nothing? Some businesses perhaps in retail have an online presence, and that's something, while not maybe only a fraction of what you were doing in your retail premises, it's still something to keep some money coming in. Again, something to think about as well is, okay, you may lose some of your contracts with customers if there's an issue on this regard, but also as well, have you contracts in place where you actually have conditions and owners' conditions around delivery, where you're committed no matter what, and really to look into these conditions to ensure that you deliver to this customer? What's the situation if you can't do that then because of this outbreak? Is the contract worded in such a way that you can get out of this? Something to look at and something to be realistic as well when you're an auditor and looking at this. The key one here on working capital, of course, you need to ensure as the auditor, and what management do as well, that they have a plan going forward, and realistically, do they have resources in place, be they actually internally created or sufficient resources from bank funding to continue going forward. Otherwise, other things to look at, of course, is bank covenants. There could be a risk, as I say, with this, no cash coming in, that you breach your bank covenants. If it's quite a material loan, this really could even have implications for going concern. And something we're seeing where some businesses I know thought that their actual insurance policy had a business interruption clause that covered this. My understanding from just reading in the media is a lot of businesses are finding, no, that was specifically more relating to your actual building and interruption, not able access to your building. A nationwide crisis like this is, in a global crisis, is not covered under that. So again, if you have companies saying to you the insurance will pay out in this regard and help them through this situation, that needs to be assessed. Perhaps it will, and I hope it will, but then again, maybe it won't. Conal, on to the next slide. So the very clear and very, very important thing here, and your overall message I'm getting out here is, if there is a going concern situation and a material situation here, you need to be very, very clear and exact in your actual going concern note in the financial statements. And again, you need to actually note exactly as well with relation to a material uncertainty. We've given an example wording at the bottom there, as I say to you, to actually just go through what exact wording should be used. So it's very, very important to say, if there is material uncertainty, to use the exact words in that regard. Again, as I say to you, you need to be actually very detailed. It's no good just saying there's an event, COVID-19, and leaving it at that. you need to be exact in what you're saying as what are the actual outcomes for your business of COVID-19, i.e. closure, no revenue coming in, but also what are the plans and projections that management are putting in place to overcome this issue. So you need to both have the consequences, but also the remediation plans in place, and to note that to give a detailed note in your going concern note and financial statements on that. Conal, next slide for me. Key thing here, coming on to what do you have to do as the auditor. So obviously ISA 570 is your actual key piece of work here, and it's showing, as I'm going to go through in the next slide in some detailed things, you need to get, as I say to you, the assessment that management have done for the company, and you need to kick the tires and be very rigorous in the work you do in this and at the testing you do in this to ensure that it's a realistic actual assessment they have done. Simply accepting that they tell you that, oh, they think they're okay, they have some cash in the bank, not good enough. You need to do more. And again, you need to ensure that where there are issues, that they're adequately disclosed in the financial statements. So if you can summarize it in one line, what I've put there in the actual bottom line here is you need to get an assessment in as much detail, be it verbal, but ideally in writing, because this is such a serious situation, and you need to challenge its appropriateness as the auditor. And I can't be strong enough in emphasizing that word. Conal, just going ahead and some of the work you should do then as an auditor on going concern. First thing here, I said to you, you need to get detail from management. You need to see what exactly is the impact of COVID-19, and they've talked about it on the business operations. What are the actions they're taking to overcome this? So could be getting a grant funding, it could be actually getting external loan funding, bridging, overdraft, whatever it is. But also, if there is a serious material uncertainty, it needs to be disclosed adequately, as I mentioned in the financial reporting. Yeah, you need to actually challenge this. You need to, particularly on cash flow projections, around the actual work that's done. Hopefully the cash projections will have a best and a worst case scenario. There needs to be detailed work done. You need to go under the bonnet on that, and you need to be very exacting. So simply accepting for what it is, that looks nice, that's great, not good enough. Again, as I said to you, disclosures in the financial statements, specific and detail, covered it in the last slide. Form your own conclusion, and that is key. So you need to have undertaken, got all the information, done your testing, done your work, form your conclusion, and determine then, is that going to impact on your audit report? Are you in agreement with that there's enough detail put into the financial statements, into the notes? Are you in agreement that this entity is a going concern? And the key thing, as Conal mentioned earlier, just because we have COVID-19, that still doesn't get you off the hook on the quality of your audit work. You need to still, and this is going to be even more and more important, you need to still document in detail the work you've undertaken on going concern. This may be the very time that the actual company and entity you're auditing will have a going concern issue, and you may be called to account for it. So having your documentation and your work paper on going concern now is the most important time for it, and you need to have it. Conal, go ahead. So getting on to what particularly could be your actual outcome of your audit opinions in this regard. And again, the clear thing here is, of course, your audit report has to reflect what other things you're seeing both in the financial statements and the disclosures, and has to be in line with that, but also the uncertainties that your actual assessment work has come in. So you need to have that. Of course, one thing to remember is for the last 2 to 3 years since the recent changes in about 2017 in the International Standards of Auditing, you need to actually have your actual, you have to comment on going concern. There's no getting around it. So what are your options here? In up until now, most entities we're seeing, of course, you have no material uncertainty, going concern was not an issue. But now, more than likely, a lot of entities, you'll be at number 2 here, where you will have material uncertainty, you will have adequate disclosure in this regard, you're not actually qualifying, or you're putting in an unmodified opinion in here, you're doing that, but you do have to put an emphasis of matter to the notes and to the detail and the issues you're seeing. Now again, you may come into actually number 3 and 4 here, where you're seeing inadequate presentation and detail here. And again, you may have to qualify the opinion if it's material, but again, if it's material uncertainty, but again, even go further, disclaim the actual opinion if you see that the issues you're seeing and the uncertainties are both material and persuasive. So something to really remember. And again, of course, you may have management who are actually unwilling to give you the detail, unwilling to actually give you and to talk with you about their actual assessment on going concern. And again, you're into limitation of scope here, qualifying, or worst case scenario, disclaiming depending on the severity of the issues you're seeing. And finally, at the bottom here, material uncertainties, multiple material uncertainties of the issues that Conan would have covered earlier. If there's something where you just cannot get enough assurance here, yes, and the management will not disclose this, you're into actual disclaiming opinion territory. So that's the 7 scenarios there. Conan, next slide. And finally here, and just to reiterate this one, and you will be aware if you've been on the courses with us over the last year or so, and particularly since last autumn, where both for IASA put out this, and it came from the FRC as well in September 2019, where there has been more of a focus and an update, as I say, on the ISA, the UK or Ireland 570. And it's put more of a focus back on you to do comprehensive work on the going concern assessment. Most of the issues you can see there that I outlined, getting the details, documenting your work, testing, and then coming to the conclusion and be able to stand behind your opinion. So again, this is something that was actually for periods commencing on or after 15 December 19. So you might say to me, Jeremy, that's not something that's going to be applicable now for my 31 December year end. But again, I said to you, this is something that more than likely going concern will be an issue in a lot of the companies you're dealing with. So you should early adopt this and take this approach, be comprehensive, because ultimately your opinion and what you do could be called to account here. So Conal, that's me on going concern. Post-balance sheet events. Very, very good. So basically on post-balance sheet events here, and I know we covered some of this again back on Tuesday. Again, the key thing here is to look at what is actually an adjusting and a non-adjusting event. I'll tell you what exciting here. Move ahead to the next one, Conal, if you can. And so generally what we're saying here with relation to, and I've seen this from a number of sources from other international bodies, is if we look at COVID-19 and the outbreak itself, the Chinese authorities would only have actually nominated to the WHO that there was 1 or 2 cases of a mysterious illness right on 31 December, from what I understand from the media. But the impact with relation to lockdown, even in China and far away, and obviously further as you come into Europe here, that impact didn't actually arise, and the impact on the economic and on the human side of things until January or so in China, and much later here in Europe and the United States and so on as well. So if you look at this, we would see COVID-19 as being a non-adjusting event. The circumstances did not exist, as I say, the impact did not exist on 31 December. So again, that's something to be aware of. But just because it's a non-adjusting event, that doesn't mean you can totally forget about it for the financial statements. No, is this more than likely going to be a material non-adjusting event with all the uncertainties and impacts we mentioned. So again, you have to give adequate disclosure, and that's something that's in my second point there, not to forget on that, as also references to FRS 102. Again, of course, and I've been talking to you earlier about going concern, can't just put your head in the sand on this. If there is a going concern issue with relation to COVID-19 that has come about as a result of COVID-19 for your company, just because it's come about in the January, February and March period, post year end, not going to work for you. So come on, next slide there. So if we actually look, what work can you do as an auditor on subsequent events? Now, you'll be mostly, I suppose, very aware of these already from the work you would do, but what are the key ones that really have emphasis now? As I mentioned to you, the key thing I would look at, of course, is looking at all of these reworked budgets over recent weeks and looking at, do the budgets and do the cash flow projections, are they realistic? Do they make sense? Are they attainable for the company? If you're not agreeing with what you're seeing there, and if you think it's too rosy, perhaps then there are, as I say, that you're going to be against the actual, if they're saying it's a going concern, you can't see that in the projections, or you think that they're unrealistic, you then really have serious question marks on relation to your audit reporting. If you can, of course, be testing subsequent cash receipts and to expand that work out to look at such areas where we have uncertainty on debtors, or perhaps even realization of stock when things open up again. Again, other things we need to look at here is, of course, the disclosure in the financial statements, but of course, the good old discussions with management, documenting that, what discussions you've had, what work they've done in this area, but even getting things down in as much detail as possible in your representation letter. Never a replacement for audit work, but still, it's something that if you are lacking in certain evidence somewhere, it's better than nothing. And again, just like with the going concern, guys, we have to see a dedicated work paper in this area. It's a very, very important part of any audit this year with the circumstances we're going through. We need to see that. We need to see what work you have done and what conclusions you've drawn from the work and the results of that work. Conal, going ahead. So reporting and uncertainties of limitation of scope. So Conal, as Conal mentioned earlier, we have our uncertainties, which are of course something that where we have no information, we can't, as I say, get reliable information that we'll pick at the moment on the value of a certain property, because we don't have a market at the moment. We don't know how quick property is going to drop in price, or will it return very, very quickly. So again, we've all these issues we've covered here, such as with relation to, yes, whether stocks in certain industries, whether there's going to be drops in prices, different things like that. Because time's at my side, I won't concentrate too much on this, Conal. I'll leave you go ahead to the next one. So again here, we just are going through what you need to put in here with relation to your actual, your estimates and your uncertainties. And of course, as we all know, when you're dealing with a full FRS 102, medium-sized company, you should be putting very adequate detail in with relation to both your estimates and your uncertainty. But again, and it's more reference with relation to a small company using 1A, it would be normally just your judgments you would put in. But of course, the whole nub of this thing is uncertainty and estimation that needs to be employed to actually pull together your financial statements now in these circumstances. So you have to remember, you have the overarching requirement that your financial statements, be they small or full-size medium company, whatever it may be, they still need to give a true and fair view. So in that context, where you do have material uncertainties as a result of this crisis, you need to put those in, otherwise your account's not given a true and fair view. Conal, I'll leave you go ahead to the next slide. So where possibly could you have a limitation of scope? I think, Conal, you covered off some of these that I said to you earlier, but I'll just talk about them again very, very briefly. Of course, attending the stock take. It may be also difficult, as you mentioned, to actually inspect fixed asset purchases. But also, you could try to send out debtor and bank reconciliation and debtor and bank circularization at the moment. Same with solicitors. Chances are that you'll get it back in a timely basis. I have my doubts at the moment. Of course, the key thing you'll have here is the going concern assessment. We covered all that. But even if you, as we get further into this crisis, and I hope it's not going to be as bad as what some predict, but getting access and getting actually access to key personnel, that people are there to actually get you the key accounting records for your review and so on as well. So in this context, and I've even seen that regulators and so on as well are keeping the same line on this, you do need to be a little bit, I'm going to use the word creative, use it hesitantly, but you do need to actually look at alternative work that you can undertake. Conal has covered off that in very much detail on the stock takes that you've done there, but also on relation to even looking at fixed assets, looking at different things. So it's something that we do need to do. So Conal, next slide here. This actually just gives us, I suppose, the potential options with relation to both uncertainties, but limitation of scope and impact it could have in the audit report. So the first one, and I hope for most companies this will be it, where it's simply an emphasis of matter paragraph. You're happy with the disclosures you're seeing in the financial statements that have been put together by management, but again, you just still need to emphasize that in your actual audit report to the actual going concern note and the issues of material uncertainties and significant issues that have arisen. Again, getting into the more serious issues here, where could you have a qualification of an adverse opinion? This could be, as I said to you, with relation to inadequate disclosures, going concern uncertainties, whatever it may be. Now again, where on scope limitation, where could this come in, as I said to you? So on scope limitation and all the issues we covered in the last slide, you could qualify your opinion if it's material, but not a pervasive issue. But you might have to go further where simply you're not, be it a scope that's actually limitation as a result of the company or just as a result of the issues we're seeing here, and go further and actually have to do a disclaimer of the actual disclaimer of audit opinion here when you have both material and pervasive issues. And of course, the issues, and I put that in the going concern one earlier as well, where you have multiple material uncertainties that really you can do no more, actually just put in a disclaimer on your audit opinion in the actual audit report. Conal, going ahead to the next one, and I know time is not quite on our side here. Completion procedures. These are the ones I just put, I suppose, very much just a few points down. It's probably so much more we could cover here, Conal. But the first thing, and it's an overarching point here, going through both my presentation, Conal, and yours. COVID-19 or no COVID-19, working from home, not an ideal situation, whatever it may be, but still, you still need to consider and ensure that you're actually doing a quality audit. There will be issues that may slow down your audit. You might even need to push out reporting deadlines. That sometimes is even facilitated, and I'm pointed at the bottom here, where now you don't have to file returns with the CRO, whatever it may be, for a further 3 months now until the end of June. So essentially, if you need extra time, talk to the company, get that extra time. If you actually have to take that extra time and the new processes you have in place require that, take it. Key thing though still is the quality of your audit is still expected to be just as good as it was last March. So ensure that you give time to complete, to document, and for you as partner in the engagement to review them, and that all of that is documented correctly. As we said earlier, right through the audit, you may have begun in an audit that you're now completing, but of course started the planning at interim stage back pre-year end in late 2019. Things like your risk assessments, all that needs to be updated to reflect the new situation we're in. So you need to be looking and ensuring that the key aspects of the audit are right up to speed with the current situation, right up to the date that you signed the audit report. Just throwing down a few issues there that are possible. Again, simple things. We talked about being able to visit the site, as I say to you, for completing the field work with Conal's talk. But again, you may have to, of course, have non-face-to-face meetings for closeout meetings, even dealing with key management before you get to that stage. So using technologies, just like we're using here today, Zoom, be it maybe Skype, maybe whatever else it is. And there is a little bit of good news at the end of my talk, or maybe a breather as opposed to good news, where look at it, certain regulatory deadlines and requirements, there has been a little bit of latitude shown. I know about Companies House in the UK and Northern Ireland, but also the CRO are giving those extra months of, I think it's 3 months on each side, of breathing room for filing the accounts. So don't feel unnecessarily pushed and in a rush to complete an audit that you're not concentrating on the key issues and not doing a good audit. Don't do that, whatever you do. Conal, what's the next point there on the next slide?
Sure.
Am I finished, Conal? Oh, Conal, I think you had a point though to make as well, had you?
Very good. Yeah, just to give you my understanding of the situation with regard to late filers, north and south. In the UK, you have to apply.
You do indeed, Conal. Yes, indeed.
Yeah. Whereas, as I understand, as far as I can, from what I can see from the CRO, it's automatically available once you file by the 30th of January.
You are correct, Conal. You have to contact the Companies House, and it's only something that came out. Actually, I remember putting up it on my LinkedIn feed and on the group I have now for practitioners. And again, actually, indeed, not plugging it, but you're all welcome to join as well. So connect with us on LinkedIn. It's another way we have a disseminating issues on this. But yes, you do have to contact Companies House. I understand it's merely, nobody has been turned down yet from what I understand, but naturally I don't have that oversight of things. It's merely a simple, yes, of course, we'll give you that, but you do have to contact them, not just assume you're getting it.
It seems to be quite, I had a quick look through the UK forms. It seemed to be quite straightforward, so far as I could see, but I suppose it's all in the application. Now, as we said, I'll just give the summary then, and then we'll take a couple of questions here, and then we'll finish out. It's an evolving situation. First of all, thanks very much, Jeremy. That was super. Thank you. It's an evolving situation. The webinar, it's obviously we're going to do this again. The whole area of stock takes, of gathering evidence, of reporting, especially of post-balance sheet events, of things like what was raised earlier. Great question. Access by incoming auditors is all is dealing with. I said the last times I would deal with a question that came up at that one in this one, so I'll do that in a minute. But if any of the issues in this webinar affect you, do read auditing standards, accounting standards, company law. Go to the Institute website. We've got a lot of resources up there at the Institute website. Look at our LinkedIn page. There might be talk on the LinkedIn page, which Jeremy's doing a lot of work on keeping together. The question which was asked last week is, supposing I've signed off an auditor's report recently, what do I do? There's no, as I understand it, absolute requirement to withdraw and reissue recently signed auditors' reports. But if you have a situation whereby you have an auditor's report which is going to be circulated widely now, which isn't the typical situation for an SME, to be honest, But in those circumstances, you might consider withdrawing and reissuing and issuing it again with something in it, some sort of post-balance sheet event referring to COVID and the impacts of COVID. You might. This is an evolving situation. Watch out for more news about that. But that's my best thoughts on that. You could read ISA 560. That's your place. Particularly the guidance, the A sections towards the end there. They talk towards the end in the guidance sections as to how you should approach that. And it's the grey shaded, which means it's for UK and Irish application. I was actually looking at the IASA version myself there. Now I'll just take two queries here. One person saying feedback from companies is indicating that they simply do not know what the impact is on cash flow. Difficult to forecast the next week, never mind 12 months. What's the best way to approach? Thanks. Well, really good question, really good point. And the fact that we're willing to sit here and talk for an hour doesn't necessarily mean that we're any better at predicting the future than anybody else. Look, what I would say there is what you appear to have is an uncertainty. Like they do not know. So that's the thing to disclose in the first instance. In other words, you can't get yourself to a position where you can say there's no uncertainty. You have an uncertainty, and therefore that uncertainty should be disclosed in the basic preparation note, and possibly if you're an auditor, an emphasis matter paragraph, if that's the way it's looking. Now, I mean, you may choose not to sign or not to complete now. Why would you if you don't have to? Would be certainly some guidance to wait until some more certainty as to where things are going. The second question there is tied up with this. What are the implications for going concern if the client is claiming the temporary COVID-19 wage subsidy scheme? The conditions of the scheme include inability to pay wages. Can the client be a going concern in that event? Well, I suppose you've got the classic case of, in order to get a loan, you have to prove you don't need one. In this case, a grant, you have to prove you definitely do need it. So in order to become a going, I suppose it's the opposite situation. In order to basically survive, you have to prove you can't survive otherwise. So it's a kind of almost a self-answering question. I think if you're getting to a point, and if they have some certainty around their ability to claim the wage subsidy scheme, that in that case, that they probably have some certainty around whether they can continue or not. So it may in fact have dealt with the issue. They may have dealt with that particular issue. So there you go. That maybe hopefully deals with that point. Somebody else is asking, at what point does COVID-19 become an adjusting event? Certainly March, but what about January, February year ends?
I think, Conal, my thoughts on that is that probably for January, it's questionable here in an Irish context. If we think about what impacts were we seeing in January, I can't think we were seeing very, very much. But in an international company where we had supply lines to China, different things like that, perhaps you could say yes. February, we're getting into a more edgy territory, definitely March. But you have to think about the impact and I suppose the reach of the company and the size of the company as well. So there'll be different answers for different companies. Big multinationals probably will be a lot earlier than your Irish SME. So when did the impact really hit home? When did you have to close? When did your sales go through the floor, basically? Would I be too far off the spec there, Conal?
I'm thinking that, the closures, the economic impact of COVID reaching Ireland's shores didn't happen until March.
That's what I'd be thinking as well. Yeah.
Yeah. Now, I mean, obviously,
the impact would be the key. The impacts will be the key one. The timing of the impact when we saw the closures would be the key trigger for that.
Yeah, the closures. Because it's not the disease itself. It's the response of governments to the disease. It's the response of governments and the response of society to the disease. We didn't have to close everything. We could have sort of taken the Swedish approach, which is to keep everything open, which we didn't. But that was a decision taken then to close because because that was the decision taken. So that seems to me to be the way you might look at it. Once again, all these things, we're in the start of this thing. That's the first time we've been asked that specific question as to when exactly this thing happened. That's my initial answer to it. But look into that one, examine that one. There's guidance out there on that one. You can parse the guidance that's out there to see can you get better information than that. Obviously, as people think more about this, there's more guidance put out, and the more as the questions arise, people answer them. But that's the way I'd be thinking at the moment, that the event is in March. It's a March event.
I would agree with you, Conal. I would agree with you. Have we any more questions there, Conal?
One or two more, I think, yes. Can we get a couple? Yes, you can. We're going to send them out by email, I think, and we're going to put them up on the website. So yes, you will certainly will. Up on this, we can adjust the event. Yes, we had that. Can you cover a scenario where audit has been completed, the audit report not signed with December 19 year-end audit? Yeah, okay, well, the scenario there is that this is a post-balance sheet event. You would have a serious disclosure around the event. You would have to make a consideration about going concern as to whether there was an uncertainty around the ability of the company to continue as a going concern. In either event, you might well have an emphasis matter paragraph in an auditor's report, drawing attention to that. I mean, the company was probably sound at 31 December, but everything after that needs disclosure. You know,
I would agree with you, Conal. Definitely, you have a. Sorry.
No, go on. Well, I mean, I suppose, like I say, we're going to be, and I mean, we're not holding back here. This is as far as our thinking has got on this thing. But as I say, the idea is that in future webinars we'll have gone into this in more detail. The more guidance will be out there, which will bring to your attention and more detail around that, and possibly boilerplate, which we haven't got yet that I've seen, around how these notes should look. We'll see. Maybe some of them will become public by that stage, and we'll see what people are saying, and we'll certainly bring that to you as it comes to us. That's as far as we've got at the moment. Going concern issue, possibly, depending, you know, it's not a requirement to put in a going concern issue if the company isn't experiencing difficulties. But if it is, obviously you should. And post-balance sheet event of the impact, is the impact material? More than likely, in most cases, yes. Therefore, it's a non-adjusting post-balance sheet event which you're drawing attention to as a note. And regardless of all of that, you may well be putting in a emphasis matter paragraph into your auditor's report, and you'd go to the relevant ISA to depending on the type of auditor's reports you were going to put together. We're going to talk a lot about auditor's reports next time. And we'll probably talk a bit more about stock and net realizable value of stock, recoverability of debtors, valuation of tangible assets, and all those questions. Guys, we're well out of time. We're well over time, so we better call today. So listen, thank you very much for your attention. Thank you very much for your attention. Don't forget, this is part of a series of webinars. We're coming up with ideas for webinars. One around state supports would certainly be an interesting one to put together for you. So watch this space. We've also put together an enhanced COVID resource page on the front of the Institute website. Watch out for that. Watch out for tomorrow's e-news. It's going to be a big e-news tomorrow, and we're certainly going to include in that our guidance on attendance and stock takes for SME. So watch out for that. Thank you very much, Jeremy, and thanks to everyone for your attendance. And we'll sign off now. Take care.
Indeed. Bye-bye to everyone.